Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 270 for July 20th, 2020. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we are going to be talking about the S&P 500. And discussing the most recent Crowd Forecast News report, which you can find on TimingResearch.com. And so today I have arranged for Melissa Armo. She was supposed to be here. She's having some technical issues, so hopefully she can join us in a few minutes, but also Michael Filighera and Jim, the option professor. And Jim will be moderating, so I'm going to go ahead and turn it over to him now.
Okay, sounds great. And hopefully Melissa will be able to join us very quickly here. But we do have Michael Filighera with us, and he's going to give us some details on what's going on as well. And he actually focuses on one of the markets that are actually moving the most here this morning and are getting a lot of steam going, and that's in the precious metals. So before we get started, Michael, a little quick background on yourself and what you're doing down at the company.
Okay. My name is Michael Filighera. I am located in San Francisco, California. I have been trading, I hate to say, for 40 plus years. I was an options market maker here on the Pacific Exchange, also on the London traded options market, and on the European Options Exchange in Amsterdam, and on the DTB in Germany. I returned back to the United States, and I went back to the P Coast. But then as the markets, at the turn of the millennium, the markets began to slow down pretty dramatically in terms of volume on our floors, and things started to go electronic, and then I did as well. I moved off the floor and set myself up here in my office and began to just trade. I went and decided that it was going to be much easier to play volatility, which was also pretty good back then. And I chose to become a day trader, and that's when I started to trade the futures. My primary markets remain the S&P and the NASDAQ. And as Jim alluded to, I also have been a gold bug since the 80s. So I do follow that market very closely as well, and I'll have more on that in a little bit. And that's it for right now.
Okay, sounds good, Michael. We have some base questions that we do ask when we have Monday morning meetings. And basically the first one is from today's opening on the S&P 500, which was about 3224. Where do you think the market may be as we go into Friday? Because there's a lot of earnings, as you know, coming out this week.
Yes, and it's a really tough call, but I ended up saying lower, and I will give that a 60% probability.
Okay. Now, with regards to some of the reasonings that you have behind it, can you share that with us?
Sure can. My primary reason behind it is twofold. The markets, I believe, are very overbought at the moment. So any kind of a pullback would be in line off of current levels. Going against that, or not necessarily going against it, but we, as Jim said, we have many earnings reports that are coming out this week, and some of them are the big boys. The largest one, I believe, is going to be like Amazon. But I know we have Amazon coming up, we've got Apple coming up, we've got Advanced Micro coming up, et cetera, all the way down the board. And then Microsoft, which I believe is anticipating that they're going to, well, the market's anticipating that Microsoft will blow the doors off of their earnings. So that's propping the markets up at the moment. And it's basically tech. So we have to consider which tech stocks are in the S&P 500, which are these larger players. And believe it or not, Tesla has just been added. So we've got all of that going with us, but I do believe that some of the earnings realities are going to come in. And what I mean by that is that the frothiness in the anticipation of blowing the doors off of their earnings reports, I think will come back in. And that started, in my opinion, with Netflix. Netflix was kind of pulled back into the realm of reality after it reported, and they weren't necessarily bad, but it was some of the forward guidance and just what the prospect of them continuing in this vein really looked like. And I think that just kind of brought a little bit of a cap on the just rampant buying that we've seen. And then, of course, until today. What's supporting us again today is that Amazon got a huge boost in their pricing. And they got a huge raise from Goldman Sachs up to $3,800. So again, I'm going to stick with lower, but remember, I'm just saying lower than 32.24. And from this level, that's $5. That's nothing. So I'm not looking for a whole lot, but I am looking that the market will likely move lower by Friday.
Yeah, it does seem like the last couple of weeks they were buying value, and value has been pretty temporary, meaning it's had some runs, but they've been very temporary runs. And it obviously seems like the switch has been back into mega cap growth and also tech. Like you were saying, we're up $168 on Amazon, and that correction underneath 3,000, looks like it's reversing a bit, huh?
Yeah, it really does. Yes, I agree with you.
Wednesday you'll have Microsoft and Tesla, and so that'll be interesting. Tesla supposedly announced earlier that their sales Q2 over last year's Q2 was minus 5%. This is a very interesting company from the standpoint of valuation and the exact amount of cars they actually sell versus the valuation. So it could be a very wild ride for the Tesla crowd, huh?
Yeah. It really can. And I have to agree with you because Tesla was actually down a little bit this morning, and then came the announcement that they're a shoo-in to get added to the S&P, and the stock's up $100.
The other thing that was the other thing that was kind of noticeable today is Moderna and AstraZeneca have been hit very hard after going up. And it seems like the money's switching over to Gilead Science because they actually have a drug that seems to be out there used. Versus these guys are just saying things are going good and good and good.
Right. And I think that's an important thing to add because of the volatility, it becomes much more difficult to make a determination as to where the market's really going to end up, because the things can switch from, yay, it looks so wonderful, to, oh, it's not so good, because of what's happening outside of the markets in terms of, we have Moderna and AstraZeneca working on a vaccine. And we get one report that the vaccine is looking extremely positive in the initial trials, and that pushes everything up. Oh, then it's just okay, and that brings everything back down. Then so we got all that in play. So it's going to be really difficult. And I think you have to become very macro focused on particular issues if that's what you're trading. But if you're trading index, it's going to be difficult.
Later in the week, we have Telecom and AT&T on Thursday and Verizon on Friday. Do you have any feelings on those two?
I don't, other than I don't think that they're going to
be good. Hey
guys,
sorry to interrupt. Melissa, can you hear us now? Are you there?
I can hear you. Can you hear me?
Yeah, sounds good.
Okay. All right. Hi, Melissa.
Hi.
Hi. This is Jim here. I'm just going to try to introduce yourself. So if you would give a quick background on yourself and a little bit about what your company's doing right now.
My name is Melissa Armo, and I own the stock swoosh, and I look at gaps in the market. So I teach people how to trade gaps, and that's what I've been doing for the last 12 years.
And are you doing it on individual issues or the indexes, or both?
I look at individual stocks. Right now it's earnings season. Sometimes I play the market, but it's earnings season right now, so I usually try to focus on stocks that are reporting earnings. Like tonight is IBM.
Right.
Amazon is a big one out this week on Thursday night, which could definitely affect the market. Microsoft is Wednesday night. So those are the things that I watch.
And on a day like today, didn't Amazon kind of gap up a little bit on the opening?
Yeah, Amazon is rallying today, and it's probably the only reason that the market's lifting somewhat. But, you know, again, going into the earnings, Amazon had a massive big red bar back when the market fell off once they reclosed California on the 13th. And so I wouldn't get back in long here Amazon today. I mean, if you traded this today as a day trade, you could have done this and gotten out. Right. But, you know, to me, that was a very bearish bar that happened on the 13th, and not knowing exactly what the outcome of earnings are on Thursday. I don't think this is a good place necessarily to go long, at least long term, Amazon right here today. And I also am, you know, not sold on the market here moving higher out of this area either.
With regards to you look at gaps, do you also look at obviously gaps on the downside like Moderna and AstraZeneca?
I didn't look at AstraZeneca this morning. I can look at it. I did see mRNA. Again, that fell today, but that's not something that I would have done aggressively as a day trade. Any of these ones that are on the vaccines or trials are very wild and very whippy, and you're trading the news. And I'll look at the gap, but I usually am not a big person trading on news gaps because, again, they can go one direction and then go the opposite direction. Like tomorrow, this could turn around and make new highs. So, I mean, I try to tend to stay away from things like that unless it's so great. But I really didn't think this gap today was that great, to be honest with you. It's down somewhat from Friday's rally. And again, this did fall today, but I don't think this was something great. And no, I didn't do it. To be honest with you, I didn't do anything today. There wasn't really anything good today in my mind. And with earnings season out this week, I say wait for the quality gaps because we're definitely going to have them. And IBM could be one of them. Mm-hmm. I do bearish gaps, and IBM would be a great short if it sets up right tomorrow. I don't know if it's going to because I don't know what these earnings are going to say, but I'm definitely going to be watching IBM at 4 o'clock today.
With regards to the metals, you know, GDX or SILJ, they seem to have gotten a real boost this morning. Did you think that there might be something there, or do you think it's a one-day only sale, or what do you think?
GDX, I will look at here. I don't normally follow these things, but I'll look at them if you want to hang on here.
SILJ is the silver.
GDX is still in a downtrend. There are better things to do than this. GLD is looking a lot stronger if you want to go long something, even though it's more expensive. GDX is still in a downtrend. The other one you said SILT.
SILJ.
Oh, SILJ. God, I've never traded any of these things. Oh, these are ETFs. These are ETFs. I think this is better if you wait till this gets like over 15. Mm-hmm. Trying to break out today. It did gap up today. It is rallying. I'd say this is a lot stronger over 15, but it's trying to get there. These are things I don't normally do, but again, these sometimes go with the market. So that's people are buying gold, people are buying the precious metals as the dollar is, you know, when they're looking at the dollar. So I see that, but these aren't things that I normally do. But over 15, this is strong. The other one is in a downtrend.
With regards to, we have questions we normally ask on Mondays. Michael has already answered his. Do you have an opinion on where the S&P will be from today's opening till Friday's close? We opened at 3224. Do you have any kind of a feeling where we might close on Friday, higher or lower than that number?
Well, it's really going to depend on Amazon. If Amazon blows out the earnings and gaps up and makes new highs on Thursday night, then this market, the SPY will probably finally get over that area at 325. At 324, it's been struggling. SPY could make new highs this week if that happens. And then all longs are on. But as far as the Amazon, if Amazon kabooms and goes down, then the market's going to fall, and we could finally fall and break out of this area. We've been trading in a range, a very, 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 very tight range, really since the beginning of June, end of May. So if the market the market could break up or down out of the range this week, depending on Amazon and Microsoft too. But I really think Amazon is going to be the one because Amazon has doubled in price since the March lows. And again, it's fallen off since there, but that is definitely one of the market leaders. So I don't really know if the market's going to move higher or lower at this point because I don't know what Amazon's going to do. Right now, if I had to look at it, if you took away Amazon earnings, if you took away Microsoft earnings, if it was just a normal week here in the market, I'd say that we're going to stay in the range or we're going to break lower, because the market continues to try to lift over that area, and it is really struggling to do it. Even today, it's not able to do it. So, I mean, a lot of this news, even when we have these rallies, I call it a fake rally, because it's really not going anywhere, because, you know, you get a little bit of good news that they tested a vaccine, but the vaccine isn't done. We're probably not going to have a good vaccine, to the end of 2020, which is still fairly quickly. So the market could have a lot of little fake rallies in here. Qs are strong, but the SPY, even though it's strong, hasn't broken out of that area. So I would wait. I would wait if you want to go long, or you can be short in here if your bias is that you think Amazon's going to crash on the earnings, which I wouldn't be surprised if it did. I wouldn't be surprised if it did. These companies are spending lots and lots and lots of money trying to protect their employees and everything they're doing for COVID-19. Even though Amazon has been open and selling and done great and doubled in price, there's a cost to what's going on right now for every single company, even Amazon, and something could happen unexpectedly where it falls. But if it rallies, then the market's going to blow over the number.
You put any weight into the VIX? It seems to be shrinking under 25, which you know, has been the low point since the March drop.
I really don't watch that either, but the reason that is that way is because we're trading in this range. So as soon as we do something big, that's going to change. And again, I try to stay away from those things. I think it's too risky to trade things like that, and I don't even watch it. Back when it was a couple of weeks ago, a couple of months ago, whenever it was, there were brokers that were doing margin calls on people, and they wouldn't let them trade that. So I just don't trade that. I tend to trade things that are solid as a brick. Companies you would know of,
Right.
stocks, volume, things that move at least $1 in the day or more. I don't do any low float stocks or penny stocks, and I stay away from ETFs for the most part unless it's the market, because the market can move. And the market gaps every day in the SPY and the diamonds and the QQQs. But a lot of these other things I really just never look at. You can get more play, I think, in stocks.
Yeah, I was just thinking the VIX as an indicator, not as a trading vehicle.
Yeah, I only look at the gap as my indicator. My indicator is the gap, which is the difference between the close and the open. That's what I look at to make my trading decisions. And again, so it's not news, and it's not even what the results of the earnings are. Like, for example, let's go back to Amazon. Amazon might have great earnings, but it might gap down and fall and sell off. So sometimes you have something that has great earnings and sells off, or bad earnings and rallies.
And are you generally out by the end of the day?
Always out by the end of the day unless it's an option, which I look at options out for 1 to 2 weeks. So the other one this week, that's a big one, is Tesla. Tesla's out the night of the 22nd, the same night as Microsoft. That's another one I'll be watching. That's another one that just had a massive move up in price. It almost doubled in price in just the last month. So that could have another big move. I don't think that's going to affect the market. If that rallies, it's not going to move the market. If that drops, it's not going to move the market. But that could have a nice move for an option play. Again, these things that are super duper expensive are better to trade as options, but they're still even expensive as options.
You have any opinions on telecom Thursday and Friday? You got Verizon and AT&T.
I don't know anything about that. I don't even know what you're talking about.
No, I said there's earnings on Thursday for AT&T, that's T, and on Friday Verizon, VZ, and those are fairly large telecom companies, and you got 5G coming up and things like that. So is there any feeling on those?
Let me look at AT&T here. This would be a better short than long if it sets up right. I don't know if it will. That's AT&T. Verizon, let me look at, I'm looking at these things so long. Verizon would be a better long. So
Yeah,
Verizon's a great long if it gets over 58, 59, even over 60, which isn't that far away. Today it's a 56. So I like Verizon a lot better than AT&T.
Yeah, AT&T's got DirecTV and Time Warner, and those are kind of drags on their earnings, I think.
Yeah.
Friday, you've got Intel. You know, NVIDIA has passed them up pretty good as far as chip making is concerned. But do you think Intel has an opportunity maybe on Friday after their earnings?
Well, again, this goes in this whole sector here. Like, say, for example, this is against whatever happens in Amazon. It's not going to work right unless it's with what happens with Amazon in the market. So I'm just pulling up INTC here really quickly. But, you know, this is an example where, say Amazon gaps up and this gaps down, this is probably going to reverse and not work right. This is again in that bucket. Actually, this is very strong. I'm just looking at this here. INTC is pretty strong here. This is a better long.
Yeah, I was seeing it's kind of creeping up. Yeah.
Yeah, definitely. But I think the market right now, there's a problem going on here. The QQQs made brand new all-time highs. The Qs have been strong, 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 strong. The Qs are rallying today. Apple made new highs. Apple went almost to the 400. Amazon doubled in price since the March lows. So those things move the Qs while you have the banks dragging on the SPY. All the major banks are out. They reported earnings last week. Goldman was a nice gap, but it fell on the earnings. WFC was down in earnings. BAC was down in earnings. C was down in earnings. So none of the banks did anything right on earnings. It's hard for me to believe that the SPY is going to continue and make brand new all-time highs without great financials, and you just don't have it. That being said, if we come out with a vaccine, we'll skyrocket, but I don't think it's going to happen in the next week. So the only way that the SPY is going to get over that area this week is if Amazon does something astronomical. And what would that be? Make new highs. Make new highs again. Go like to 3,500 or something. And I mean, I'd be shocked if that happened, but this stock never shocks me. But that could happen. But that's the only way, really, that SPY is going to get going. And when you think about it, you say, okay, well, the stock has to go 500 points for the SPY to go $2. You know what I mean? Like, that doesn't make any sense. To me, the SPY feels heavy, heavy, heavy. People are long here, and they're not exiting their longs, or you have new longs coming in today because we're green. We did gap down, though, today in the SPY. We didn't gap up, and it's a long way from Friday. So we have Tuesday, we have Wednesday, and we have Thursday. And again, either the market breaks out or breaks down or stays in this range that we've been in pretty much, the range in the last week is the tightest range we've been in, tighter than even since the mid-June period. So look, we didn't go anywhere last week. Look at it.
Yeah, we should have some excitement by Friday. You'd think that, huh?
Yeah, I mean, my bias, though, again, I don't know what Amazon does, but Amazon has to blow out the earnings and go sky high to get this market moving here in the SPY, because the SPY is stuck, even though the Qs are rallying. And if that doesn't happen, if there's any down gap in Amazon whatsoever at all, the SPY is going to fall. Whether or not it breaks that level at 300 or not, I guess it depends really how crushing the gap is. And Microsoft could move their earnings Wednesday night as well, but I really think Amazon is the one to watch.
Yeah, Amazon bouncing back to this neighborhood is about a 50% throwback from the recent high and the recent low. So this neighborhood around 3150 or so, it'll be interesting to see if it can surpass that. That's a 50% throwback of the current range.
I know, but this is such a bad place to buy here. Look where the stock did.
Well, that's because it's coming, a 50% throwback is 3150. It went to 3142. So if it's going to fail, it more than likely may fail from this 50% throwback. You know what I mean?
Well, I mean, again, this bar back from 713, that's in every chart because of the market. That's when the news came out and we fell on that afternoon. It's just a very, very bearish bar. The only way Amazon's going to get through that is if it happens in something like earnings. It's just a very bearish bar. But again, today you could have day traded this because we definitely rallied. But there's not that much moving today. And also going through the other indices like the diamonds, which is the index for the Dow, Boeing is a drag. Boeing is lower. I have to look up and see when those earnings come out. But this stock has been pulling the diamonds down and pulling the diamonds down just like the financials have been pulling down the SPY.
Yeah, and industrials had a big run last week. They're giving it up a little bit this week, huh?
Yeah.
Yeah. All right, let's get Michael back into the game here. And Michael, again, you're trading a lot of these indexes as well, but you've also been very bullish on gold and silver for a long time, and that's been spot on. So let's focus on your feelings on gold and silver now, because again, the silver is closing the gap on the gold to silver ratio very nicely. And it also is into an area of this 19 to 21 area that if it were to get above that, there's a lot of open land up there. What are you thinking? Michael?
Oh, I think we lost him. So hopefully he'll log back in a second.
Oh, okay. All right. Well, yeah, I was just trying to get to some of the things that he was kind of focused on and get his opinion on what specifics he might have on that right now. Melissa, any particular stocks that you're kind of looking at again, you mentioned a few, but are there others that you kind of focus on mostly? Because you sounded like you have, you know, a handful of stocks or so that you really focus on rather than try to get every single stock out there.
Well, I'll look at everything, you know, I'll look at something different every day in the next, you know, 6 weeks because it's earnings. But there is things that I'm watching, like things that we played a lot this year that have really had nice moves, whether they're up or down. Like we did Apple when it ran up. Again, I wouldn't do Apple here now because we're waiting to see what things happen this week with the market, even though this is on support. But, you know, I've been liking the cruise lines. I've been liking the airlines. I've been liking Boeing. You know, those are things we've played a million times this year and made money on to the downside. And God forbid they close us down again, you know, nationwide. I mean, those same things that took a hit are going to take a bigger hit once again when that happens. So those are things that I'm just watching to see if they can get any more playthrough. Other than that, just specific earnings.
Yeah,
Hey,
I was
I think Michael's back.
Michael, you back?
Michael, you there?
I am.
Okay,
Okay.
so Michael, I was switching over to you so you could go into some of the areas. You know, you had mentioned you do the stock indexes, of course, but you've been bullish on the metals for quite a long time, and obviously that's been spot on. So I was asking a question before you were on about the gold and the silver, because the silver seems to be outpacing the gold lately, and the ratio seems to be tightening. Do you think that there could be more opportunity in the silver? Particularly if we can get above this 21 area and fill in all that white area on the chart that seems to be open?
To be honest with you, I don't. And where I find most of my strength is in gold. And I think that now that gold has gotten above 1800 and it's staying pretty firm, I believe that the rally will continue. Now, there's a lot of mining problems in silver at the moment, and I think that that's what's really been holding it down. And the fact that they are not going to go and start taking the mining, or start mining again, because the cost to mine it per ounce is not balancing out with the price. So that's why I think we're seeing that rally, because I think there are a lot of traders and just a lot of other people that are also seeing that despairing gap between the two. And so it's starting to make up some of it. I don't think that it's going to totally fill in and then go, you know, what it normally would do. But I do feel that gold is just kind of basing here, doing some backing and filling, and is going to continue its rally. I do believe that gold continues to just signal that something's up and it's uncomfortable with the uncertainty. And if silver follows through, then fine, silver's going to follow through. But I don't really follow it that closely anymore, Jim. I'm more just really involved in gold. And that's where I've held my position for quite some time.
You know, copper went up because Chile and Peru,
Right.
their mines didn't open as fast because of the COVID situation. I guess, you know,
Right.
they didn't want everybody in a closed area mining and, you know, breathing on each other. So that market went up strongly. And I was wondering, maybe the silver is benefiting maybe from lack of reopening as well of some of the silver mines.
Actually, you're right. It could. And if the demand were to pick up and there wasn't enough in the market to, you know, meet the demand, then you're right. Prices are going to go up.
Yeah.
But with all that still out there yet to be seen, then you have to realize if you're going to go in and trade it, then you're just speculating.
Yeah.
And whereas with gold, I think there's some more fundamental and long-term bullishness in that particular metal. Copper, I was a little surprised with, but then once I caught why they were doing it, it kind of, you know, made me pull back a little bit.
Yeah.
Because I have a lot of copper. And so I thought, well, this should be a good time. I'm going to go out and start sell it. And then, you know, so I'm keeping an eye there.
That $3 range is kind of big. If it starts jumping above that, and then the cat's out of the bag. Same thing with silver. That 22, 21 is very big.
No, you're right. you're spot on there. Spot on with
The
it.
silver and the gold, Freeport McMoran's been very friendly to me, and that SILJ's been very friendly to me. So, I don't like to badmouth Santa Claus when
I
I'm
hear
getting
you. But
presents.
on
You know
that,
what I mean?
let me ask you on the SLJ,
Mhm.
SILJ,
Those are the
um,
juniors, yeah.
which miners are they?
They're the juniors, so they
The
tend to
junior,
be,
okay, that makes a big difference. Yeah. Okay.
because juniors can get bought out by the seniors if they get going enough. You know what I mean?
If they do well enough, you're absolutely correct. And therefore, that's why I would play the juniors versus the big boys.
Yeah, it's a
So
more
you're right.
aggressive. It's a more aggressive play, but the whole region is an aggressive play. So you know what I mean?
At the moment, but I
Yeah.
like that one, and I like what you're doing. So
What
I
about
would
on
put you on.
what about on the platinum? That has been trading at such a huge discount to the gold, and
Until that reverses that,
yeah,
I stand aside. And
$1,000 discount. I mean, you've been in it a long time. That is a little bit of a head scratcher, huh?
yeah, yes, it is. You're absolutely correct, and it remains so. But it's kind of similar to how we're equating volatility, not to diverge and go or do a tangent all the way over to volatility, but it's kind of the same thing as like, as people notice things, they start jumping in. And I noticed that last week in volatility, just before the roll and, expiration's over, they came in and started smacking vol as the market rallied. Now that's the old call. And that all before, this is all pre-pandemic, that volatility would get crushed as the market rallied. So I want to just add to that conversation that I find that very, very disturbing in a way, because what it can also be signaling is that complacency is returning to the market. And that just adds another danger signal to me of, you're going to start selling volatility off.
Mm-hmm.
Then we get all those people that, like I think the last time I was on, you and I were discussing volatility, and it was right around 30 to 34.
Right.
And so you were telling us very accurately what happens to the market in terms of trading ranges per point down in volatility. And I think that's what's really propelling a lot of this, taking all the fear out of the market, because, well, obviously, if they're thinking that we're getting complacent again, well, then fine, I'm just going to hold my long, or I'm going to go in and buy more, and then we get smacked. So I'm very concerned in terms of what I'm watching in volatility, because I think that the uncertainty is larger than it was before.
Yeah. The quant guys were saying that if they could get volatility between 20 and 25 between now and the end of the summer, that sideline cash who doesn't want to really be involved with the stock market that goes up or down 1,000 points a day, which is what happens when the VIX is at 30 and 40 and higher,
Right.
They may feel more comfortable bringing a lot of large money back into the market. So I think it's probably a double-edged sword with this VIX. If we stay
Right.
under 25, it's
Right.
showing complacency. And then if some news hits, like a second wave that's serious or whatever, then it could be a situation where we could get another spike in volatility. But if we were to maintain a stable 20 to 25 VIX, those billions and trillions of dollars that are on the sideline that aren't making any money,
Right.
you may be able to seduce them back into the market, because the market isn't going to make wild gyrations if the VIX is between 20 and 25. And,
Yeah.
this enormous money, wants very little part of a stock market that goes up 3 or 4 or 5,000 Dow points, in a day.
Right. No, that's true.
Yeah.
And I don't think we're going to have to wait till the end of the summer to see the resolve of that one.
Yeah. Well, the end of the summer will be here before you know it, because you got it's already.
Well, and I also think
August.
that they may push volatility down. They may get it down to 20, but I think it's like they're going to get it before the end of the summer. And I actually think we're going to see this resolved before the end of the week, because as we've been discussing, I think some of the bigger players, their earnings reports are coming out.
Yeah, Melissa made a good point. You know, if Amazon breaks badly, or like Netflix did, then you can say sayonara to the rally. If
Right.
they blow the cover off the ball because AWS makes all kinds of money and this and that, then of course
True.
that could be the match that gets us through 3250 and 3300 and whatever.
Well, don't forget Goldman's got the 3,800 tag on it today.
Yeah. Well, like I say, there's a gap at 3,300 on the S&P that could easily get filled on the next big rally. And then, of
Right.
course, if they go to 3,300, the likelihood they're going to go after 3,400 with that NASDAQ already way into new highs.
Yeah, I see I'm sorry. I thought you were saying that Amazon at 3,300, but
No, I'm talking about the S&P.
got it.
Because
Sorry
there's a
about
gap
that.
around 3,300. If we break through 3,250 because Amazon comes out good, it will be filling that gap. And then, of course, once that's filled, you know, and the VIX is lower, here comes the sideline money to maybe push you to 3,400. Wouldn't
Right.
surprise me that
No,
way.
very, very realistic. It could very well happen.
Yeah.
I mean, look what they're
Yeah,
doing
I
right
mean,
now.
I think if we get over 325 in the SPY, we'll definitely just go right back up and make new highs. So I
Yeah.
don't think that's going to happen before the election. That's my 2 cents, unless we get a vaccine. So then you say, well, that's a long time away. That's, 4 months away. So then there's no place else for us to go but lower. I really think that we're going to go back down to the March lows and break them in the next, I'd say, 6 to 9 months. So that could
Well,
be between now and the end of the year, or it could be by March of 2021, I'm going to say, because I just think that there's too many things that are hanging out there, which is the possibility of, one, the country shutting down again, two, depends on who wins the election in November, and three, there's going to be issues with China that haven't come up yet because of the election, but they're going to come to a head. It could be end of 2020, early 2021 when those issues come up, but they're definitely going to come up. And so that's going to create selling in the market. I think the market has one more big drop in it.
So I do agree with that analysis, Melissa. But my question back to you is like, okay, what do we tell the swing traders between now and next Monday?
Well, as far as swing traders, I would just do specific things. I would stay away from the market unless you have 100% conviction in what you're doing in the market. Or if you're in and you take some profits, take half profits out and let some of it ride, I would be doing specific things like we talked about, Microsoft, Tesla, all the earnings that are coming up. Summer trading is great if you're focusing on specific things. You get momentum and stuff. Netflix was a good trade. It wasn't as big as I thought. Netflix was short on Friday. And then that is going to tank if Amazon tanks. I really can't.
Well, they're all
going
to tank. I do agree. I agree.
Yeah.
I think in terms of like what people can try to do between now and next Monday, if you're a swing trader, honor your stops, have your reversal points, have your pivot points, and be able to just get in and trade them. The biggest one being you have to honor your stops. Even as a day trader right now, you must honor your stops. Otherwise, you're going to get killed. Because what volatility is left, we're seeing sudden moves of $5 or $6 in the S&P all within a 2-minute period. Those are pretty large moves in terms of you're long or short. So
I got Mike, I got a question for you. What about protective puts? You got the VIX at 24. Insurance might be pretty cheap.
Oh man, you're speaking my language.
Yeah, because
I'm going to go ahead and let you fill that one in. Yeah. I think protective puts are a gift. So
at 24 VIX, they're a lot better gift than they were at 36, right?
Absolutely, you're absolutely correct. And yeah, I like that strategy, Jim. In fact, I've always relied on you to fill in the blanks on what people can do with those. But
yeah, if you're up 10 or 15 bucks on a stock, to throw a couple of bucks in there to hedge it in case all heck breaks loose on the downside doesn't seem like a stupid idea to me.
Right, and I think it's a great idea, to be honest with you.
One question for you on the gold, because I don't want to get off that subject, because it is one of the best performing things lately, and the interest is not waning, it's increasing. And like I say, the silver train has left the station. Whether it's going to continue to leave, who knows? But the question is, on silver, you can see, hey, listen, this thing used to be at 40 and 50 last time gold was at 1900.
Right.
So this thing is so far behind the 8 ball. If it's going to play a game of catch up, that's a game of catch up you want to talk about. But the gold is got a high point of around 1830. It's trading 1817. How do we project where it might be going? Are you using a Fibonacci situation, or what is your targets? People want to know what your targets are.
Well, you start to, from here, you would start to use a Fibonacci that goes to like 1.382 above, 1.618 above. Ultimately, I need to open up, I'm going to pull open my chart here and I'm going to go out to my monthly. On my monthly, I have to go back all the way to 2011 to find that 1923.70 high.
Right.
And right now, the market on a monthly level really is ending up that it's going to pull back before it gets there. Now, that doesn't mean that it won't, because a monthly can stay overbought or oversold for quite a long period of time. But I see that I would expect at least a retest of that 1829, 1830 level. If it breaks above there, then we really don't have resistance until that old high. And that would be, at this point, a 9-year-ago high. And that starts to come in at 1923 or 1924 up to, we could probably put that in a range of up to about 1948 to 1950. That would be a zone. But again, realize that if we go into shutdown again, if we go into, don't forget, we've got the next bailout, not a bailout, but the next stimulus that's due to come to resolve before the August break. So we've got a lot of things hanging out there that if they don't come out, it's just going to amplify the uncertainty in the market as we get close, as Melissa mentions, we get closer to election, as we get closer to earnings being good or bad. It's going to have an effect on not only our broader market, but just on all the auxiliary markets outside, being crude, gold, silver, everything that gets to participate with us. So I think at least 1830, so we're going to get retested that high, and then likely a pullback. And a pullback from there is going to bring us back as far as 1300. It could. And that, again, that's a monthly basis.
Yeah,
So,
I don't have 100% conviction, even if they do the stimulus, that the market's going to react positively.
I don't disagree. I would agree with you initially. But then again, don't forget Pavlov's dogs are always out there waiting.
Hey, Melissa, I got a question for you. A big thing happening is that 25 million people are going to lose the extra money from unemployment insurance. It's supposed to be a $15 billion hit weekly on the economy. It's supposed to ding GDP by 2.5%. How important are you thinking of because, it seems like the Republicans may not be so excited about that $600 extra. And if you take that $600 extra off, you're talking about a pretty big hit to the 20 million people who still aren't employed. What do you think about that?
I thought it was $600 a month people were getting. I found out last week from a friend it's $600 a week. That's crazy. This is why people aren't going back to work. I know business owners in New York, they reopen. They can't get their employees back. They're making more not working. That's ridiculous. They shouldn't extend it. If they extend it, long term, it's going to hurt the economy. People have to work. This is what the government wants. It wants to control everything we do, and they want to pay people they want to just support people. That's not what the United States of America is all about. I'm not in support of that passing. Again, I understand what people have gone through, but people need to get back to work.
Right.
How are people going to go back to work safely? Can you tell us that?
Well, then they got to wear masks, and all the employers have to do the protectionary things, and most of them want to. Some of the
there are industries, though, that are locked up. That would be the conventions, that would be sports stadiums, that would be all that kind of stuff. And all the people that are involved in the support of those industries, their job is just not there. And
well, then the government can do specific support terms for those industries, just like they did the bailout with the airlines.
That would be the most sensible thing to do.
Yeah.
But the thing here is that if Amazon misses and if Microsoft doesn't hit the ball and they take this support off of the 20 million or 30 million that are still out of work, those three things could be the thing that would halt this rally a bit, huh?
You're right, it could, but I just want to add, I'm all for getting the economy back to work and getting it to function a lot better than it is. But I do not see any thought about, well, we've got to just go ahead and open the economy and people have to go back to work because there are people that are opening their businesses, but they can't get their employees back to work. How about this? Lay them off and see if you can't hire new people. And if you can't, then who's right and who's wrong? People are not going to go back to work if they're not feeling safe in order to do it. And in particular, if we take a look at, excuse me, the cities that are getting swamped by new cases, regardless if you want to say, well, it's because we're doing more testing or whatever that situation might be, the fact is that more people are being hospitalized. ICUs are filling up. Across the southern states, they are beyond capacity. They're now pulling in refrigerated trucks in Phoenix and in Texas to put the dead in.
Yeah, no,
So we have a very serious problem. And to start making decisions economically instead of realistically and to your constituents and your people, then I think we're in some serious trouble.
They had freezer trucks here picking up dead people and bodies the first month in New York, and I've been stuck inside for 5 months.
Yeah.
So
you're on both sides of the issue because in New York they're actually going into phase 3 of reopening, so they're in a very mature state. Whereas California, where Michael is, they're shutting down the economy again. So you guys are a tale of two cities, huh?
Yes, we are.
New Yorkers are listening. New Yorkers have been wearing masks. Everybody out there, even the homeless people on the street, are wearing masks. So New Yorkers like life. They want to live. New Yorkers have been listening. That's one of the reasons the cases have gone down.
Right. The other thing about testing I find amusing is
don't want to function. I wouldn't go back into them.
I was thinking that blaming the testing about more cases is like blaming testing in school that we find out more people haven't read the book. You know what I mean?
That's a good one. I like that one.
But anyway, that's neither here nor there. You guys are in two different places as far as the maturity of what things are going on. The question is that are we going to see a situation where, things get out of hand again and all of a sudden, we're closing down everything again and all that kind of stuff. But I did want to just go over a couple of things with Melissa. Melissa, do you find yourself going after certain sectors? Like, all of a sudden you'll see the tech sector doing good, so you'll be focusing on your gap trades in that sector, or do you keep the radar pretty wide?
Well, if I see something like it, for example, Amazon, if Amazon has earnings and Amazon ends up doing something that's playable, whether up or down, then I will look at that entire sector to trade with Amazon and with the market on that particular day. But otherwise, not so much. I mean, it has to really be something that moves a great deal. Like, in other words, like I didn't do that with the banks. Like the Goldman was up, but the other ones were down. So that really wasn't a play there. It has to be something that it's so significant, a specific stock in the sector that's so significant that it would affect everything else, which isn't always the case.
Yeah, you went after the epicenter stocks at a pretty good time, the hotels and travel and leisure, and that was good for you, right?
Yeah, we've had tons of good plays in those things. So right now they feel like they're a little bit played out. But again, once these things have earnings again, we'll see if they have any more play through in them. And again, if the country's going to ever open up. I mean, I don't know if the cruise lines are going to operate at all in 2020 or not.
Do you see any opportunity in Wells? I mean, the darn thing is about $2 off of pretty much a low of lows, and I mean, it's just it just seems to be.
You mean to buy?
Yeah. In other words, is there any value? We're at $22 was the low. It's been hanging around 23 to 25. I mean, is it going to take out that low in your feelings, or it's just?
Well, I think all the banks are lower except for Goldman. Goldman is the strongest right now. Even JPM doesn't look that great, and that's a leading bank as well. But Goldman, I liked the gap up, but it just couldn't hang on, and the market didn't look good that day either. But Goldman will eventually make it around again, back up over the high of that day of the opening gap. Goldman is the only one that I would look at as a long term right now for the banks. But otherwise, no, all the banks I think are lower. And that's the problem with the SPY. Eventually, this is going to come to the point whether they, continue the stimulus or they don't continue the stimulus, all across the board, businesses and individuals. Either way, you're going to have problems with these banks because people are not making some of their payments. And some of them, they're giving extensions. But eventually, people are going to have to make their payments of the people they've given extensions. And you're going to have some defaults. You're going to have loan defaults, you're going to have mortgage defaults, you're going to have credit card defaults, the banks are already anticipating that.
Right.
So they're already planning for that. There have people that have done all their analysis and everything for the last couple months about have because of COVID. So I
Yeah.
just see the banks being lower.
Their double whammy is going to be obviously the people don't get rehired, and then the government cuts their benefits, and the next thing you know, there's a real pinch on all those loans that they've got, credit cards and things like that, right?
Right, which some companies did give people, a break from. Now, I don't know how that worked exactly as far as if they were reporting them late and allowed them to put off their payment. I know they had some, here in New York, they allowed people to, like there was a moratorium where you couldn't do any foreclosures and things. So, I mean, I don't really know the specifics of what individual banks did, but I know that there was forgiveness in some of these things for people paying on time, but people still are going to have to eventually go back to paying their bills. And so that's going to be the other issue going into the end of 2020, just economically looking at that.
That, what do they call that? The forbearance thing's got to come to a head, right?
Right. Yeah.
One last thing to you is on the cybersecurity. Are you looking at anything like Palo Alto Networks or anything like that? Because that seems to be trying to go somewhere.
Give me the stock symbol. We'll look at it.
PANW. They had the breach over at Twitter, so obviously everyone's getting back on the bicycle as far as cybersecurity here.
I think that's always a threat. I don't think there's necessarily anything specifically come to a head. I think that's always a threat.
Yeah.
They're talking about the whole thing with TikTok, with China, and even the Huawei stuff is out there. So all of these things are always a threat. I think it's more going on with what's happening internationally with stuff with China than I would say specifically like with the hack with Twitter. I don't know what happened there exactly. I didn't follow up with the articles for that, but
Yeah.
It just goes to show you why you shouldn't conduct personal things or business things through social media. Just assume that everyone can see everything that you're doing.
Yeah. Well, the Palo Alto is definitely on the bicycle, and so is Hack, which is the ETF, so it's interesting. We're coming to the top of the hour, Melissa. Could you just, again, reintroduce yourself and your company, and also how people could get a hold of you? And if you had a special offer you want to extend, this would be a great time to do it.
Sure. I own the stock swoosh, and my name is Melissa Armo, and I teach a class on gaps. That's what I focus on in trade. My bias here in the market is it's going to move with Amazon, which is the big one this week. And if people want to get a hold of me, they can email me at melissa@thestockswoosh.com. And I trade options and day trade. So if people aren't interested in learning my system, they can just sign up for the options newsletter. And right now I'm doing a special through the end of this week for Christmas in July, it's called. It's pay half now, half later for both the class and the newsletter.
Perfect. And right there on your screen, you have email for Melissa right there, and also the phone number at the bottom. So write that down and contact her so you can get information on what she's doing. I think there'd be a lot of value to that. Thank you again for being here. With regards to Michael, yep. Michael, just again, quick introducing and a little bit about what's happening at the company and how they can get a hold of you.
I'm Michael Filighera. I am situated in San Francisco, California. If people want to get a hold of me, you can send me an email at michael@logicalsignals.com. And right now, I'm not really doing much other than trading, day trading, and I am offering coaching. More on that if you just stay tuned. Also, just get your name on my list, and by doing so, you will receive my daily update for free.
Okay. Perfect. So do take advantage of that. And again, you can see right there the logical signals, and that's how you get a hold of Michael. I'm Jim of optionprofessor.com, and every week we have a market update that covers stocks, bonds, interest rates, the US dollar, as well as gold and other things as well. So it's free of charge. Simply go to optionprofessor@gmail.com to get into the queue. And then each week we'll shoot it out to you by email, and you can get a vantage point of what I'm looking at as well. Right now, I'm turning it back over to David. Thanks, Melissa. Thanks, Michael, for being here. I think we gave out a lot of information. And of course, we encourage people to get a hold of you guys so you can get more information on how you guys do business. David, back to you.
All right, thanks everyone. Great show. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. You can also go to TimingResearch.com, which you should be seeing right now, and to get the archive of today's show as soon as I can get it posted, and any of the past shows and reports on there as well. And just want to thank my guests again for today, Melissa Armo of thestockswoosh.com, Michael Filighera of logicalsignals.com, and Jim, the option professor at optionprofessor.com. Thanks, everyone.